It's just money. It's made up. Pieces of paper with pictures on it so we don't have to kill each other just to get something to eat. It's not wrong, and it's certainly no different today than it's ever been. 1901, 07, 29, 1937, 1974, 1987, Jesus, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves. We just react. And we make a lot of money if we get it right.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. This is where you come for the big calls in the market, guys. If you've been watching this channel since we started in 2021, we gave you the Bitcoin short for a 70% drop. We gave you the summer top and drop for the S&P in July 2023. We gave you the Bitcoin long in October 2023 for a 130% gain. And this year, we gave you the summer top and drop as well for another 10.5% drop. And you knew about it for months, hitting to the penny, target of 51.20 to the penny. And now we're talking about the next big move in the market, which comes with the September 18th rate cut, new all-time highs across the board. Many people that watch this channel still don't believe that's possible, and that's totally fine. The bulls are going to tell you, obviously, it's going to happen. But guys, I think it's important, again, to put everything in perspective with market history, how the market normally behaves in these types of scenarios. So a good friend to the channel, Jeremy Irons, is going to read to you from the New York Times what happened September 18th, 2007. Listen to this clip, guys, and tell me what you think about it in the comments. Lee, roll the clip.
Market soar after Fed cuts key rate by a half point. Stocks immediately soared. The Dow Jones Industrial Average registered its biggest one-day gain in almost 5 years, up 335.97 or 2.5%. The Standard & Poor's 500 stock index rose nearly 3%. Some aspects of today's Fed's move could fuel inflation fears. Gold, a traditional investment safe haven in times of inflation, soared immediately after the Fed's decision was announced. As United States interest rates became less attractive for investment, the value of the dollar against the euro touched a new low before recovering slightly, and oil prices continued to climb even further above $80 a barrel. Economists said what appeared to push the Fed to cut rates by a half point were the dismal job market numbers from August. Many Wall Street economists placed the odds of a recession at about 1 in 3 or somewhat higher.
I guess, Lee, you probably didn't know Jeremy Irons is a big fan of market makers, right? But guys, this is what happened in 2007. The Dow put on its biggest one-day gain in 5 years. Gold skyrocketed, oil went up. And at the time, the very last sentence that Jeremy read, at the time, the recession call was 1 out of 3 Wall Street economists, or a 33% chance roughly from Wall Street economists. Do you know where we are now with that recession call? Goldman Sachs CEO came out last week and said he doesn't see a recession at all. The CEO, one of the most powerful financial firms in the world, no recession at all. And Lee, roll that Bloomberg clip. This is what everybody's thinking right now. This is why I do believe this all-time high is going to happen. It's all about market sentiment and the midwits in the market that control all the funds that go into these indices.
The way that I'm describing the evolution of the economy right now is an incremental slowdown. I don't see this as actual weakness.
It's not necessarily that the economy is at a different point, but I think the balance of investors' concerns have changed.
Yes, you're going to see some weakness, but you're also going to see some areas of strength.
The odds of a soft landing are much higher, and the risks have become a little bit more balanced.
When you look at the underlying fundamentals, yes, the economy's slowing, but in a good way.
Soft landing. It's going to be a soft landing, guys. It doesn't matter that back in .com, the Fed, Wall Street, the average media person on TV, none of them had a recession call. What happened? NASDAQ fell 82%. We got a recession. What was the calls on the street for the GFC? No recession call from the Fed. No recession call from Wall Street. What happened? A global financial collapse. It's the same thing we have now. The market cycle is going to play out the same way it always plays out. I know that's so shocking. I don't know why it's shocking to people. You have the data going back for 80 years. The market cycle plays out the same way every single time. Every single time, people can say this time is different, or no, AI is going to change the world. They said the same thing about the internet. It doesn't matter. These assets are not worth the price you are paying. And when big money flips the switch to sell, remember, they're 80% of the market at all times. Peak days for traders for retail is about 20%. That's the peak, averaging somewhere between 10% and 15%. When big money flips the switch, when that one big algo goes to sell, every other algo flips the switch, which is why you saw in 3 days, you got a 10.5% decline in the market. Now, if you watch YouTube, you're going to get a lot of reasons for that. And I'll leave it up to those guys. I don't really care what the reason is. You guys already know that. I don't care if it's the yen carry trade. I don't care if it's political. I don't care if it's geopolitical. I don't care if it's economic, a bank fails, whatever. It doesn't matter. What matters is the moves play out as predicted to the targets as predicted, because this channel is about bringing financial freedom to people and making money. That's what segregates us, separates us from the other channels. Our YouTube is a very small business. It's really a hobby, as you guys know. Look at the sub count. This is really a hobby for me. This doesn't make me a living. I have to trade for a living, so I take pride in the accuracy of my calls. Looking for the market to move up this week. What we have with Powell is Jackson Hole, okay? Jackson Hole is on Thursday. I'm going to show you in the charts what the market did. We pulled down a little bit Monday, Tuesday. We bottomed, and then we went up Wednesday, the day before Jackson Hole. Powell is expected to set the markets up for the rate cut. Then we got another little bit of a rally. It elevated the markets. I'm going to show you that on the charts. It's all about setting the stage, fueling the rockets for the September 18th rate cut. That blow off top, guys, is key, because trading to that blow off top and then trading that blow off top, which will be the biggest trade of my lifetime, and looking at when that blow off top will occur. You get all of that information on this channel, and I'll show it to you guys in the charts. So just be aware, you're not going to hear the narrative shift. And as a matter of fact, every single time you get a rally, it's just further confluence for Wall Street. The soft landing is all but assured. It doesn't matter that unemployment at spot 9% up off the low has 100% of the time since World War II given you a recession. It doesn't matter the 3-month 10-year yield curve inversion, 100% of the time has given you a recession. Every single recessionary indicator that has 100% accuracy has triggered. Understand, this is all 12 recessions since 1953 have been the exact same way. Fill in the blanks for the reasons why they happen. Again, doesn't matter. All 12 have been the exact same way, played out the exact same way. If this was really a flip the coin type scenario, I've been talking about this on the Discord, to have 12 binary outcomes, binary meaning yes or no, okay? Yes, recession, no recession. To have 12 in a row play out the exact same way is a 0.000122 statistical probability. Invert that. It's a 99.9% likelihood, basically an economic law based on how all the indicators are set up, that you're getting a recession. That's what's just mind-blowing, that Wall Street still has the balls to go out there and sell you, and people buy into it. And I see it on the YouTube clips. Whenever I see like a Tom Lee clip on YouTube, I just like to go and look at the comments, the sentiment, because remember, this market is all about sentiment. The reasons don't matter. It's the sentiment. This quarter point hike or 50 basis point cut, this quarter point cut or 50 basis point cut Powell's going to do September 18th would take a year and a half to get into the economy. It's all about symbolism and sentiment, and that's why the market will move up, okay? And just for one more time for the new subs, Lee, throw up our unemployment chart, because guys, this is so crucial to understand and nobody talks about it. Look at the recessions. Lee, highlight them in red. Do you see the black wave? That's unemployment. This is why unemployment creeping up is so dangerous prior to the recession. Why? Because unemployment spikes during and after the recession. We hit 13% unemployment in the GFC. We are currently trending right now at 4.3% unemployment. And I think that's going to double or triple this recessionary cycle. It's going to be catastrophic, guys. But right now, it's all about fueling up the rockets for that September 18th rate cut. Looking at our targets, 5,900 to 6,100 on S&P futures, getting Bitcoin up to those delicious targets in the 80s, 90s, maybe hitting 100K. And I'll show it to you all in the charts. Guys, be sure to like and subscribe. It really helps our little channel out. This channel, which is really amazing, we're about to hit 4 million views since we started the channel in summer of 2021. So big thank you to all you guys. I'll let you know when we get there because it's a pretty cool milestone, even with the small amount of subs that we have. So I'm really proud of that because this information gets distributed and you're going to see this information on other people's channels. Clips have already been sent to me. Clips have already been sent to me, guys. But if you want to check out our Discord, message Lee in the Telegram. It's a great place to be. Love to have you there. I produce additional content, as does the staff, every single week for Discord members. All that information is in the video description. Lee, let's start the show. All right, guys, before we start, take a moment. If you want to trade these markets, check out Bitunix and SimpleFX. All the details with our market makers VIP bonuses is in the video description. Message Lee in Telegram if you have any questions and you want to join our fun trading group of people seeking financial freedom. Check out the Discord. That link is in the video description. And yes, the website will be launching soon. So much programming goes into this, guys. I will definitely make that an official announcement because all of our content will be available there on the website and you won't need the Discord to do it. So let's start off on 2007's chart, right? This is very important. You guys have seen this multiple times now. Again, the symmetry in the marketplace, market synchronicity. We'll go over that term sometime and what it means. Fed funds rate 5.25%. Jackson Hole back then was August 30th. Okay. Where I believe we are right now, here's August 30th, Jackson Hole. Okay. This is what the market did. This is where we are right now. We sold off same exact high, July 16th on the S&P. We sold off, we rallied back up. This day could turn out red. The next day could turn out red. And then the day before the Jackson Hole meeting in 2007, we rallied up off the base. Look at this. This is your rally, your 1, 2, 3, 4-day rally with Jackson Hole. And then you pulled back again. Okay. You pulled back again. And ultimately, again, setting the staging ground for the September 18th rate cut where you went up and made a new all-time high. This new all-time high lasted one day. It took that one day to conquer the all-time high 7 years earlier from the dot-com cycle, and then you declined 57%, okay? Bottoming in March of 2009. So I think we could have some chop here the next couple of days. Jackson Hole, I anticipate you could get a little bit of a rally up with this, and then again, we will base and get ready for the breakout on September 18th with the rate cut, guys. It's right there in front of you. Nobody on YouTube sees it. You're getting the information here, okay? Let's look at the modern day market. Again, Jackson Hole's 22nd to the 24th. Fed funds rate, identical level, 5.25%. Where does that leave us? Here's August 22nd. This is the Jackson Hole event. You can see we're at the 786. Some key resistance here on the S&P at the 786. We could come down, maybe back test the 50. Ultimately, with the Jackson Hole event, I think you're going to chop around underneath 55.92 or just above 55.92. You'll get volatility, but it's all about holding that 50, right? It's about holding this 50. Chop up, chop down, doesn't matter. Short-term trading ranges in here. This September 18th rate cut, you will accelerate. I believe you will break out. Our targets again, 5,900, 6,100 on the S&P. We have that magnified in the larger pattern somewhere in my charts. Where is it? Right here for the S&P, okay? So again, when you look at it from this perspective, we're going to try to hold the 50, chop around. It's about getting to September 18th and then launching symmetrical moves in the marketplace. A 15% wave took you up in 2007. Let's move this chart back here and I'll show it to you right here. This is the wave. Look at the bottom in 2007 up to your all-time high was 15.44%. The exact same wave from your bottom to your new all-time high at 5,900 to 6,100, and symmetrical move with the previous wave, giving you this beautiful ABCD pattern. AB equals CD. That's my projection in the marketplace, okay? Down at the bottom, you guys saw it on YouTube. I told you 5120. What did you see on YouTube? Oh, there's another wave down. The crash is going to continue. It's going to keep going down. And then look what it did. It rallied back up, the strongest week in the marketplace since 2022. It's about the cycle. It's not about the technicals. It's not about the market setup. It's the cycle. The sentiment drives the cycle, and the people don't know what's happening. People behave with a herd mentality. They behave the same way in these bubble cycles over and over again, and you're seeing it play out in real time. That's why I'm so confident in the new all-time high call in confluence with the rate cut, because we rallied with the rate cut for 23 days in the GFC and 23 days in .com with the rate cut. We should be making a top in October. October 11th was the exact day in 2007. We made that top. If we rally the exact same amount of time, we'll have an October 11th top, but we should be looking at tops in October. Could it change, guys? Could it go out to November? Could something else happen? Of course it could. We're talking about a cycle from 2007, but so far tracking absolutely beautiful with the marketplace, okay? So that's what we're watching here. The levels that you want to watch on the S&P futures here, 55.92, which you're below. See if you get a 1 or 2 day sell off, maybe retest the 50, bounce back around. Should get some type of baby rally, some nice little rally with the Jackson Hole event starting on Thursday, the 22nd. And then we're going to end up either just above 5,600 or just below, or both, right? You come down, you come up, you make a double top, come back down, retest the 50. That doesn't matter. This movement here does not matter. What matters is setting up, how the market sets up for the September 18th rate cut, for the blow off top, okay? Because that's a good potential long trade there. And then obviously catching the top if we peak in October, as we should if we play out continuing with the cycle. Let's go ahead and look at NQ. 2007, this is setting up identical. So the S&P, you have the macro movements are the same. You got the sell off the same day. You got a slightly less retracement this time than you did last time, but the NASDAQ is setting up the exact same way as it did back then. You got your sell-off, you're retesting the 50 right here at 3. This is 2007. Here's your 2 days prior. You see these 2 down days right here from 3 to 4? This is your 2 days prior to the Jackson Hole event. You got the Jackson Hole event. You got a baby rally that puts you back above the 50. You held above the 50 until the September 18th rate cut. Boom, 14% rally from there, okay? 14% rally from there. Now, if you look at this in the modern market, look exactly what you're doing at the 618, just like in 2007. You're trying to hold the 50. Again, 2 days, Monday, Tuesday, you could come down here prior to the event, maybe get some volatility. Come Thursday, the event, I think you're going to see, with a dovish Powell setting up the market for rate cuts, you should see the NASDAQ rally up, and that rally could be to 20,206. You're at 19,633, and you're going to ping pong in here, just like when? Just like 2007, between 19,600, 20,200 for the September 18th rate cut, where you will accelerate and boom to the upside, okay? Looking at those targets of 21,971, 23,228. This is setting up identical. I can't stress that enough. The exact same market movements, including battling the 50 at the same fib retracement. It's looking like this, okay? So you're going to come up here and set this stage somewhere in here for your W, and then that's going to be your rise, your breakout was September 18th. 18th. Guys, you only get this information here. Definitely be sure, help us out, like and subscribe. Leave me a comment. I answer them as always, okay? So your key resistance right now is obviously 19,596 with the 50. Again, you could get a small retracement here over the next couple of days, setting up for a rally to get you above the 50 with the Jackson Hole event. What does that mean for the Dow? Same thing. Dow's rallied up here. You're at 40,833 on Dow futures. The 786 is at 40,809 from the second peak. So you're just stuck here. Same thing, guys. I would expect the Dow to possibly retrace a little bit over the next couple of days, get a little bit of volatility. But ultimately, with the Wyoming event here, August 22nd, the Dow should get some more bullishness to it, maybe up to 41.1, right? Right up in this level, the 886, come up to this level and do what? Chop, guys. You're going to chop. Could it get above it? Sure. Can it come back down below it? Of course. None of that matters. What matters? September 18th, because the Dow will do this. And then we'll be targeting 42.2 as our first level. And again, the Dow is going to move in confluence with what? The S&P, obviously. It's going to move in confluence because that is a mirror image of the Dow. Much smaller version of the S&P, more volatile in that sense. But just watch all these markets move together, guys. They do it over and over again. What about the DAX? I had a couple comments. Guys, I covered the European markets all the time on the Discord. So if you're interested, definitely check that out. DAX, I'm looking at this pattern here. This is from one of my streams that I did, but this is what I'm looking at on the DAX. The DAX is rising up right now. I think you're going to come to this 18.5 area, and guess what? You're going to find some resistance. You're going to chop around above the 50, and you're going to look to break out. These retracements are for illustrative purposes. You're going to look to break out on September 18th with the broader markets. The DAX giving you the same pattern Bitcoin has, 3 peaks, okay? You're going to get 3 peaks, and you're to get your domed house potentially on the DAX as well in confluence with the US markets. You'll chop, you'll break out September 18th. We'll be looking at upside targets on the DAX as the time gets closer, but they're all mimicking each other because the S&P drives the global markets. And it's especially important when you talk about Bitcoin, okay? Bitcoin is especially important as well. Let's go ahead and jump to Bitcoin. Bitcoin, your 3 peaks, domed house concept that we're looking at, which is nothing more than a head and shoulders pattern. Let's look at this on the daily because this is really important. Here's your topping pattern on the daily. Again, this is the pattern I'm looking at to come up to the upside. Guys, on the daily, look at your 50. You challenge the 50. Does this setup, by the way, does this setup look like anything? It looks identical to the NASDAQ. You're battling the 50 right now. Bitcoin staying below the 50. I saw Ben Cowan, somebody in my room sent a screenshot of his thumbnail. He went on David Lynn's show and he was saying that he thinks this is like 2019 and Bitcoin's going to go basically sideways for 6 months. I just want to say he has a huge channel, so good for him, but I think he's 100% wrong. I'm on the opposite side of that trade. Bitcoin is going to move up when all the global markets move up with the September 18th rate cut, okay? It's going to happen fast. It won't be going sideways for 6 months. It's going up and it will peak and it will make a pattern and then it will decline because the global markets drive the world. It's not a crypto-centric world. It's a Wall Street world, okay? These are the elites that run everything, but this is how money flows in the market and you will see it in real time. But I have Bitcoin coming up here, guys, and if we pull this fib from the all-time high down to your retracement low, I'm looking at Bitcoin coming up to that 67.5-ish, 68.5 when we get the breakout above the 50. Could it take longer? Bitcoin rallied to the 50 before the equity markets. At some point, it will break out and it will put itself in this refueling position of the marketplace, okay? It will put itself up here while we're awaiting the September 18th rate cut right back up in these highs, okay? Again, this is another 3 peaks pattern that you will break out from once you test these highs. And again, I told you where we're looking here for this upside targets on Bitcoin, it's all going to depend how strong of a rally we want to get, especially in the NASDAQ. But Bitcoin, I have a first stop at 80K, 80,619, 1618 at 89. We have to see this post September 18th. And of course, the 200% move, a doubling of the range, takes you to 98,755. Love to see a scam wick at least hit 100K if we get up that high. But guys, just understand this setup identical to what the NASDAQ's doing right now. Identical. at the 50. Bitcoin's pulling back some. This is the slingshot move to elevate you. You're going to see some euphoria in the global markets with Powell this week, starting on Thursday, being dovish, setting up for rate cuts. We'll see if Bitcoin responds as well. That first stopping point, I want to see us get back up into these topping ranges above 66.5, 68.5, somewhere in this range right here, where we're going to start doing some sideways action in preparation for September 18th. All right, guys, hope you enjoyed the video. Please be sure to like and subscribe. I answer your comments as always. Hope to see everybody in the Discord. Take care.